Hello and welcome to the ISE ETF and Index Outlook for March 26, 2012. This is Patrick Sresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange rate fund symbol SPY. We have identified two support resistance levels. One at this 137, 138, where we've substantially broken above over the last 2 weeks and continue to be trading above, as well as up above the 144 to 145. Really at this stage, the next few days early this week will decide whether this was a small consolidation like we saw in that first week of March, and whether it still manages to make one more break higher towards that 142 to 144 area where that overhead resistance lays. In general, we believe that the market at some point will begin a substantial correction, and the last couple of days of selling that have occurred could have actually begun that, but we certainly are not seeing any follow-through selling, which at least leaves the window open for there to be one or two more spurts higher before an inevitable corrective pattern begins. When we say corrective pattern, we don't anticipate it being a market crash, and more than likely it will emerge as a buying opportunity, but simply we're just waiting to see where and how it actually begins. Next year I want to take a look at the ISE Water Index, which is the symbol HHO. The ETF trades is under the symbol FIW. And with this water index, we've now seen two direct tests into the 92 to 94 zone on the upside. A lot of whether or not the water index can make this break will depend obviously on whether the broader market is prepared to still make one more push higher on the S&P and so on. We really at this stage are going to be watching Friday's little reversal candle going back up. If we do have a bullish break in the broader markets, this could potentially have a quick spurt up to 94 and maybe even back up to or break even up to the 96 level on the upside on the short term. The bigger picture, we more than likely are going to as well see some sort of a bigger market corrective pattern in here, especially if the market cannot exceed this 92 to 94 zone. So I would remain relatively skeptical about the sustainability of any short-term moves higher. Next year, I want to take a look at the ISE Global Engineering and Construction Index, which is symbol CVL. The ETF products trades under the symbol FLM. We looked at this about a month ago, and when we were looking at it, we were looking to see whether this 255 to 260 would act like substantial overhead resistance. And now, when we're reflecting on it, it certainly has continued to do so. We've now seen a pattern which could resemble that of a head and shoulders formation. So I drew in a little neckline along the 248 level where all those lows came in. It'll be very interesting to see whether or not the bulls can actually break the pattern by forcing a break above 260 on the upside. But any failed rally attempts here and a subsequent break of that neckline would see a corrective pattern all the way down to the 230 to 235 level on the downside. Finally, I want to take a look at the ISE Global Copper Index, which is symbol ISC. The ETF product trades under the symbol CU. A couple weeks ago, we identified this double top formation on the upside and subsequently suggested that if this rally back over here in this wedge was to fail, that we would quickly have a retest on the downside in to this 370, 380 level. We're now at a very crucial make it or break it moment on copper. We've now zigzagged our way into a corrective level where support traditionally would hold, and copper here would have to make a substantial reversal. Otherwise, if we see any substantial weakness below this 370, 380 level, it would indicate that there could be a new downtrend getting underway. So if the bulls want to keep copper in the path of going higher with the stocks, they will need to reverse it off of these levels. That was your ISE ETF and Index Outlook. Thank you for joining me.